Shaleen, can you just share some insights on the global and Indian macroeconomic factors in the funding environment?
Yeah, I mean, I think it's something which we discussed at the report as well. I think there are multiple pieces to it. I think one is there is a lot of noise about how the global macroeconomic environment is and how bad it is. I think we need to de-average it. There is obviously in US a fair amount of pressure right now because they are figuring out how to not get into recession, balancing inflation. It's a little bit of overhang of a fiscal stimulus which came in, right, which is unprecedented. And then obviously we have Europe where there is a side effect of the Ukraine war, and imports have been there, and there is a pressure on the inflation there as well. And China, which has had a start-stop policy, right, and therefore that's playing out differently. So I think globally there is a little bit of uncertainty which has been there across, and what that has led to is overall market sentiment being more tepid, both globally and in growth tech specifically, right? And that is what's created news. But if you look at specifically India, I think there are a couple of points to note. One is India investment levels, and so also in actually global levels, they are fairly decent if you compare them to 2019-20. So there's a little bit of aberration which happened in 2021 where the numbers shot up. But comparing to 2019-20, the numbers are not so bad. And actually seed and Series A, etc., we are seeing an uptick in the numbers in many places, which tells you there is enough money for ideas out there, number one. Number two, there is the dry powder, which is with the VCs and private equity players. I think that number has been a record high globally as well, which tells you again, if there are good ideas, people will deploy money. So I think from a funding point of view, the environment is, while it's tough, it is not so bad. I think that's one big feature which we came up with in the report.
So how do you think about building resilient startups in the current environment?
I think what is coming out very clearly is that over the last few quarters, the focus on profitability is much more sharper. So, and that's a good thing because now the businesses can actually start figuring out, how to really get the unit economics, how to scale that up, and so on. I think investors are saying that, look, in trade-off between growth and profitability, you need to have a balance where obviously you're not sacrificing all the growth, but you need to have enough profitability or a path to profitability. So coming from a resilient startup, which is the discussion we were having in Tycon, the things which we have seen is the bias towards what markets are you addressing. Now India is going to be soon a $5 trillion and then a $7 trillion economy, which tells you there are a lot of sectors of extremely large TAMs. And so how do you address those markets in a manner, I think is the first question. And I think we're seeing startups doing that very well if they have gone ahead and addressed real problems which actually save their end customers some amount of money or cost saving or some efficiency which you're able to bring in the process, right? If you're able to do that, I think we have seen a lot of companies being built like that. Even some of the younger startups we are seeing scaling up actually doing that, both in B2B as well as B2C. Second part is, I think when you're looking at businesses beyond the market, how do you create your muscles around, ensuring that your cost efficiency is high, that, you're ensuring that, while you're scaling up, you're not losing sight of the whole profitability path. I think that's the second piece which we're seeing in a lot of resilient companies today.
For more updates from CXO TV, please like and subscribe to our channel.